Why does the most indebted country in the world keep winning, while China keeps losing ground? Everything we are taught about debt sounds simple. Debt is bad. Debt means weakness. Debt means you spent more than you could afford, and sooner or later, reality catches up with you. That logic works perfectly in everyday life. If a household keeps borrowing, it eventually collapses. If a company piles on debt without profit, it goes bankrupt. If a small country borrows too much, it faces inflation, currency collapse, and crisis. So when people look at the United States, they expect the same ending. The U.S. is the most indebted nation in human history. Its debt isn't measured in billions, but in tens of trillions of dollars. It grows every single year, no matter who's in the White House. By every rule we are taught, that should be a disaster, and yet the opposite keeps happening. America doesn't collapse. Its currency remains dominant. Its financial markets pull in global capital. Its military spending stays unmatched. Its political influence continues to shape global rules. At the same time, something strange is happening on the other side. China produces more goods than almost any country on Earth. It exports to the entire world. It runs massive trade surpluses. It holds one of the largest piles of U.S. debt in existence. And yet, China keeps running into limits. Its currency can't fully escape the dollar. That contradiction should bother us more than it does. Because if debt is supposed to make nations weak, why does America seem to grow stronger as its debt grows larger? While China struggles, the deeper it becomes entangled. Most people reach for familiar explanations. They say America wins because its economy is strong, or because the dollar is trusted, or because the U.S. is simply too big to fail. But those answers don't explain the mechanism. They describe the outcome, not the cause. The uncomfortable possibility is this: what if American debt isn't a mistake at all? What if it's not a sign of poor discipline, but a deliberate feature of a system designed to work this way? What if debt, in America's case, doesn't weaken power, but quietly reshapes who can win? Because if that's true, then China isn't losing because it's weak. It's losing because it's playing inside a system where America's debt does something no other country's debt can do. And if you want to understand why America's debt keeps China losing, you have to unlearn almost everything you were taught about debt. Why China plays by the wrong rules, and America doesn't. The biggest mistake people make when talking about American debt is assuming all debt follows the same rules. We instinctively judge U.S. debt using the logic of personal finance. If you borrow too much, you're irresponsible. If you keep rolling debt, you're delaying failure. If you can't pay, you collapse. That logic makes perfect sense. Inside systems where you don't control the money, individuals earn in someone else's currency. Companies operate inside someone else's financial rules. And most countries borrow in currencies they do not control. That's where debt becomes dangerous. When interest rates rise, they suffer. When capital leaves, they panic. When confidence breaks, their currencies collapse. China understands this very well. That's why China is careful with its debt. That's why it manages capital tightly. That's why it fears financial instability more than almost anything else. But here's the problem. China is judging American debt using rules that do not apply to America. Because the United States does not operate under those conditions. America borrows in its own currency. America issues the currency everyone else must use. America sits at the center of global trade and finance. That single difference changes everything. U.S. government debt is not treated like a risky obligation. It is treated as the safest asset in the world. Banks hold it as reserves. Pension funds depend on it for stability. Central banks store it as protection. In other words, U.S. debt is not just borrowing, it is infrastructure. And this is where China runs into an invisible wall. When the United States issues treasury bonds, it is not asking the world for money. It is supplying something the world urgently needs. Global trade runs on dollars. Financial markets require dollar-denominated collateral. Central banks need dollar assets to stabilize their own currencies. So the demand for U.S. debt doesn't come from trust or goodwill. It comes from necessity. China doesn't hold U.S. debt because it believes in America. It holds it because the system leaves no alternative. And the more global trade expands, the more dollars circulate. The more U.S. debt the world is forced to absorb. That's why warnings about America maxing out its credit card miss the point entirely. A household maxes out because it doesn't control the rules. America writes the rules. Judging U.S. debt with household logic is like judging a central bank with a family budget. It sounds reasonable, but it completely ignores how the system works. And once you stop seeing American debt as a moral failure and start seeing it as a structural advantage, a far more uncomfortable question appears. If China depends on U.S. debt to keep its system stable, then who is really borrowing from whom? So here's the mechanism. Not a theory, not an opinion. A flow that quietly decides who wins. On the surface, the story looks simple. The United States runs deficits. It issues treasury bonds. Foreign governments, banks, and investors buy them. It looks like America is borrowing from the world, but that description is backwards, because when the U.S. issues debt, it doesn't just borrow money, it creates dollars. And those dollars don't stay inside America. They flow outward. They are exchanged for real things, manufactured goods, raw materials, energy, labor, and services from the rest of the world. America spends first. The world works first. This is the part that matters. China produces, China exports, China ships real goods across the planet. And what does it receive in return? Dollars. But China doesn't want to hold piles of cash. Cash loses value. Cash creates instability. Cash cannot anchor a financial system, so those dollars don't stay as dollars. They are pushed into one place, U.S. debt. China converts its surplus into U.S. Treasury bonds, not because it trusts America, not because it wants to help America, but because the system leaves no safer alternative. This is the reversal most people never see. America does not owe China in the way a borrower owes a lender. China holds American debt because it has nowhere else to store its winnings. U.S. Treasuries are not just debt instruments. They are the storage unit for global savings. In the past, countries stored wealth in gold. Today, they store it in U.S. bonds. And once this system is in place, it becomes incredibly difficult to escape. If China tries to sell large amounts of U.S. debt, its own reserves shrink. Its currency comes under pressure. Its financial system destabilizes. Selling the debt hurts China before it hurts America. That's the trap. That's why U.S. debt doesn't behave like normal debt. It doesn't rush back home demanding repayment. It stays abroad, locked inside balance sheets, supporting the very system that keeps America at the center. And the larger global trade becomes, the more dollars circulate. The more dollars circulate, the more U.S. debt the world is forced to absorb. This creates a feedback loop. More trade creates more dollar surpluses. More dollar surpluses create more U.S. debt holdings. More U.S. debt holdings deepen dependence. At that point, debt stops being a weakness. It becomes leverage, not because America threatens anyone, not because it gives orders, but because participation is no longer optional. China doesn't lose because it is weak. It loses because the more it exports, the more it feeds a system where America trades paper for the world. And once debt becomes the foundation of global stability, the country that controls that debt controls more than money. It controls liquidity. It controls timing. And it decides who feels the pain first when the system tightens. How America turns debt into power without firing a shot. Once U.S. debt is embedded into the global system, it stops behaving like a financial problem and starts acting like pressure. This is where power quietly enters the picture. When crises hit, most countries are forced to react defensively. They cut spending, they tighten credit, they defend their currencies. They drain reserves just to survive. China is no exception. When global conditions tighten, China doesn't gain flexibility, it loses it. Because China cannot print the currency its system depends on. The United States does the opposite. When a crisis begins, America borrows more. When markets panic, America issues more debt. When uncertainty rises, America expands liquidity. And because the world depends on U.S. debt, that borrowing happens instantly and at massive scale. There is no immediate punishment, no collapse in confidence, no forced austerity, no sudden funding crisis. The system absorbs it, but the cost doesn't disappear. It moves. As liquidity tightens globally, capital doesn't flee the United States. It runs toward it. Dollars become scarcer outside America. Currencies elsewhere weaken under pressure. Financial systems on the periphery feel stress first. China feels it early. When the dollar strengthens, China's reserves come under pressure. Capital controls tighten, growth slows. Policy options narrow. This is one of the most misunderstood dynamics in global finance. Even when a crisis originates in the United States, the dollar often rises. U.S. bonds are bought more aggressively. American markets become the safe haven. Debt allows the U.S. to stabilize itself first while volatility is exported outward. This isn't about intention. It isn't about morality. It's about system design. Debt gives America flexibility. It buys time. It allows pain to be delayed, reshaped, and redistributed. Other countries don't get that option. They adjust faster. They absorb shocks sooner. They break first. And because the dollar system sits at the center of global trade and finance, there is no clean exit. That's why debt becomes power without ever looking like a weapon. No threats are made. No commands are issued. The system enforces discipline automatically. America can fund wars without collapsing its currency. It can rescue banks without destroying confidence. It can run massive deficits while attracting even more global capital. That strength isn't accidental. It's structural. America doesn't win because it avoids debt. It wins because it controls when debt expands, where liquidity flows, and who feels the pressure first when the system tightens. And as long as China remains locked inside that structure, America's debt keeps China losing. Why U.S. debt cannot disappear without breaking the system. And this is where the story becomes dangerous. What happens if America finally pays down its debt? What happens if the United States fixes the problem everyone keeps warning about? The answer is deeply uncomfortable. If U.S. debt were to shrink in any meaningful way, the global financial system would lose its anchor. There would be no universally accepted safe asset, no deep pool of dollar liquidity, no stable place for global savings to sit. Modern finance is not built on gold. It is not built on balanced budgets. It is built on scale, liquidity, and continuity. U.S. debt sits at the center of that structure. That's why American debt doesn't behave like a problem waiting to be solved. It behaves like a pillar that must remain standing. This is also why debt keeps growing, no matter who is in power. Different presidents, different parties, different promises. The trajectory never changes because reducing U.S. debt too aggressively would destabilize the very system that gives America its strategic advantage. And here is the part most people miss. The real risk is not that America has too much debt. The real risk is that too many people still believe debt automatically means weakness. That belief hides how power actually works. As long as the world needs dollars to trade, as long as global savings need a safe place to park, as long as crises push capital toward security, U.S. debt remains necessary. Not optional, not temporary, necessary. This does not mean the system is fair. It does not mean it will last forever. And it does not mean it is without risk. But it does mean one thing very clearly. American debt is not an accident. It is not a failure of discipline. And it is not a countdown clock to collapse. It is the mechanism that allows the United States to spend first, to stabilize first, and to decide timing when pressure rises. China doesn't lose because it makes bad choices. It loses because the system forces it to store its success inside America's debt. So the next time you hear that America is drowning in debt, pause before accepting the headline. Ask a different question. Is it a crisis? Or is it the structure that keeps the system running exactly as designed? Because once you see debt as a tool of power instead of a moral flaw, you stop asking when the system will break, and you start asking who the system was built to serve.